Hello everybody, I'm Cantonese Cat. Everybody, Cantonese Cat here. I'm going to do a GME update. Very disappointing price action over the last month or two. It's kind of eating up a lot of people. It's not the funnest to be in at this point. But let's talk about it. Now let's talk about the good, let's talk about the bad, let's talk about kind of what the scenarios are and kind of what I'm doing here based on what I'm seeing. If you zoom out here, this is still back in January 2021. This is still an all-time high for GME. GME has not really reached this price of like around $120 here ever until that point, right? So this really has set up a big thing here, and the entire time, as it was kind of going down here, it was going down on really declining volume here, and you can say that like there's a lot of hope. That's what I'm saying. Like you can say the sellers are exhausted, but sellers are being exhausted for about like 4 years straight, and it can be extremely brutal for a lot of holders that's been holding the entire time. And granted, this is also in log scale, so the devastation actually is minimized here because I'm playing off on log scale here. The truth is, all it takes sometimes just a little bit of volume to kind of come in, and price can end up engulfing all these candles over here. Sometimes all it takes just a little bit of volume to come in to be able to do that. If you are looking at a macro sense, this is the highest high that it's ever had. And over here in April 2024, this is the highest low that it has ever had, right? So higher high, higher low, this is still a bullish situation. Assuming that this is still an uptrend here, which I think it still is, then you would expect having some further bullish continuation after it's set in a higher low over here, right? You can also say that, this is a little bit of a low high, and that could be concerning for the trend, but let's kind of do a little bit of a summary in terms of what the moving average here is. And the one moving average that I generally like to use is the 20-month moving average. The 20-month moving average is going to be a part of the Bollinger Band here. And the Bollinger Band right here, you can see before it went way up, has a 20-month moving average that was serving as resistance here for a very long time. And next thing you know, all it takes for you to have just like one candle here to push through, and next thing you know, the second candle came back tested the 20-month moving average, and the rest is history, right? It flipped the 20-month moving average from being negative sloping here to positive sloping. It reversed the trend here, right? The bull trend only lasted for about 6 or 7 months. After that, it's been a brutal 4 years going down, right? And the entire time it's going down, the 20-month moving average was flipping from support here back into resistance. It was negative sloping here for about 2 years, right? Until something had recently happened, which has really flipped it from being negative sloping here to positive sloping. And as it was doing that, it also came back, like the price went way far, because all it takes is just a little bit of volume come in, and you can have price push all the way from like $10 all the way up to like 64, right? You can push price way up like that with just a little bit of volume coming in, but it just simply couldn't get that far that fast because the Bollinger Band has not expanded yet. You have a lot of resistance here, right? Even if you're talking about like fib level resistance, you got right through to the 0.618 here. Even try to challenge the 0.786, couldn't quite get there. These are log fibs, by the way. It tried to get through the 0.618 here, just not able to do that on the first try. So what it do, came back down, find support here at the 0.382, right? And it couldn't. It ended up breaking down underneath of that. So where it ended up finding support at the 20-month moving average, as it was currently from negative sloping here to positive sloping. Now that it's positive sloping, it's going to be a lot better support moving forward. And it just simply came back down, back tested it, formed a little very nice trident type bottom here. This trident type bottom means there's a lot of demand here at the zone, anywhere from like the low 20s, like 20 to 22, somewhere around there. Huge demand down here. Price ended up pushing back above because you already tested demand down here and found support here, 20-month moving average. Where did it end up going to? Well, it ended up grabbing up to the upper Bollinger Band here. It's expanding, but it's just not expanding fast enough, right? It's expanding, but it's just not expanding fast enough. So what happens? Well, it pushed a little bit through that. It ended up trying to push and trying to, test the 0.5 foot level here. Got rejected at 0.5. What did it end up doing? Well, if it gets rejected at 1 foot level, it's going to come down to back to the lower level over here. The lower level is the 0.382. Sorry about, you can't really see it. Is a 0.382, right? That could have been support, but no, it just didn't end up being support. The interesting thing, you have a trident down here, and you also have a little bit of trident up here. So right now it's stuck in a range, right? It's oscillating. It's almost forming like a sine wave. This is the support level down here, anywhere from like 20 to 22. That has been tested. That was pretty solid. Here you got resistance up here around 0.5 foot level, around 34, 35, right? You got tested over here. It's pretty solid resistance, right? So you're stuck in a range, right? We would like to see it reclaim the 0.382 here. It's not really doing that. Matter of fact, actually broke down underneath of it, which is not great, by the way. All of this is happening on like no volume, by the way. If you look at the weekly, you look at similarly look at the weekly. I'm going to turn off the Bollinger Band here. You look at a weekly, what you see here, it got rejected at 0.5. Come back down. You would think the 0.32 is going to be a pretty decent support level, right? Because it's a pretty important fit level. But interesting, you also have a couple of like wicks rejections over here, right around the range over here, around 25, right? So is there actually a 25 psychological level here that actually is more important than the 0.382? Maybe. All I know is that this whole downtrend here was on declining volume. And whenever you have a little bit of an uptrend, there is some increased volume here. All the way up to here, right, to rejection zone. And by the time when it got up there, you can also see that there was some tiredness. There was a little bit of tiredness up here. And it just ended up plummeting down here on like no volume here at all whatsoever, right? Frustrating because things are going to plummet down all the way down on low volume, and you don't really know where it's going to bottom because per volume is kind of exhausted, but you just don't know how low it can go on low volume. This is kind of like AMD, like it can just keep going down on low volume, and it doesn't have to be rational at all. Like it just doesn't have to. During the entire process of it coming down here, it's been very frustrating over the last few weeks for sure, because a lot of the support levels that it seemed like it would have claimed got broken down. For example, both the Tenkan here and the Kijun over here got broken down, right? And it's happening on low volume, so I don't think these moves are committal. I think that it's going to be pretty easy to reverse it, but again, it can keep going down on low volume, and there's no way for me to call a bottom based on like low volume. There's just no way for me to do that. The other thing that it also broke down underneath was the Bollinger support band. It broke underneath the support band. Now it's flipped from resistance, like support here to resistance, right? Does that bother me when it flips a support level to resistance on low volume? No, it doesn't. Because all it takes is a little bit of volume to reverse that. You see how it broke down underneath the Bollinger support band down here for almost 2 months, right? All it takes is just a little bit of volume, increased volume, and just pump the stock up, through the 0.32, through the Bollinger support band, all the way up to the 0.5. Sometimes that's all it takes. You can also see how it just, all it takes is just a little bit of volume, kind of push it through the Tenkan, push it through the Kijun, and then get up to the next level, right? Initially, I thought it was actually at least going to backtest the weekly Ichimoku cloud, but no, it turns out the 0.5 foot level is good enough as resistance. For a little bit of tweezer top over here, decided to go down for a low volume backtest here. And right now, we're just kind of suspended in space. What are we going to do? Are we gonna end up coming back down here and like backtest the Super Ichi cloud around 22, right? That was a pretty good area where it found support, where it found a lot of demand last time. So do we have to come back down and backtest the zone again? Maybe, maybe not, right? There is a Kijun over here, which is actually kind of a little bit closer to the horizontal breakout zone over here in the backtest. So I don't know how far it's gonna go. It could be, this could be it. It could go down to 22. It could go down to like all the way down to 20. Although I don't think it necessarily has to, because they're already back tested, already found pretty decent demand zone over here. So the very fact is like, what is GME going to do next? What is GME going to do next? Nobody really knows. All I really care about are a couple of things. Thing number one is there any secret buying pressure? I'm going to look at the daily chart here. Is there any secret buying pressure here? even though things are kind of breaking down a lot of the support levels. How do you test for any secret buying pressure? Well, there's one way to do it is to look at unbalanced volume, which if you put up unbalanced volume, this is basically a way to kind of calculate volume and kind of figure out whether or not the price at any disproportionate dropping down when the volume actually looks green and looks like the volume is kind of going up, right? That's one way to do that. And if you look at the unbalanced volume, you can actually see that there is divergence, right? And is it divergence that basically means that things are just going to pump up from there? Not necessarily, but whenever I see a bullish divergence, what I meant by bullish divergence is you can have price that just kind of kept going down like it did over here over the last 2 weeks, right? Price kept going down here. But guess what the unbalanced volume is doing is on its way up. I'm going to zoom in here and kind of show you that, right? Yeah, unbalanced volume is pointing up, right? So there is a bullish divergence that's being built over here. Whenever there's bullish divergence, to me that means that there's buying pressure. To me that means that there is pressure behind the scene where they are buying, right? So to me, I'm not that scared in terms of that, because I actually see that the whales and institutions are trying to buy this low volume chop. Now, whether or not they're buying over the counter, whether or not they're buying using like some dark pool or something like that, I don't know. I don't know for sure, right? But I'm seeing some divergence over here that's getting me to think, interesting. Now, this divergence is not just being seen here on the daily, but it's also being seen here on the weekly chart here. This is a weekly chart of GME. You can see how price since December was dropping down like this, right? I'm not lying, right? And what is the unbalanced volume doing is pointing up, right? What's the last time when you have some kind of bullish divergence like this? When was the last time it did that? Well, you have a lot of bullish divergence over here, right? Where price kind of went down here, right? Or went a little bit down, went a little bit sideways here, right? You can see how that was happening during the entire time. What happened with GME? It was showing some positive unbalanced volume, right? Last time when this happened, you have a big pump, right? This time is happening right now. Price gone down, OBV is going up, unbalanced volume is going up. There's a lot of imbalance in terms of what the volume is showing versus price. So there's some secret buying pressure over here. How long is the secret buying pressure going to be? How low is the price going to be going down for? I don't know. All I know is that, and none of this is 100%, by the way. I could be wrong. GME could be like, this could be it. And it could go all the way back down to make an all-time low. That's entirely possible, right? I find the probability of that happening low because the global liquidity is going up. And at some point, I think stocks like GME is probably going to do pretty well. But I could be wrong. It could end up just plummeting down. I see all these unbalanced volume, all this stuff is like, yeah, blah, doesn't matter. Price can do whatever it wants to do anyway. This is a crap stock. Nobody wants to be in it. Whales don't want to pump it. This is the pump. They just want to exit. Now they're exiting. This is it, right? That's not what the unbalanced volume here is telling me. That's also not what the Fintel data here is telling me. This is the fintel.io. This is basically the data you get from the 13F forms that institutional files when they have to disclose what they buy, what they sell. Over the last, this is December, this is January and February. Really, since November to December, there was a huge accumulation by institutions. Right, accumulations. They have institutions used to have maybe like how many shares is that? It's like 100 million shares, and they just all of a sudden, like within a month between November and December, they just accumulated like a ton of shares. They just accumulated 150 million shares instead of just 100 million shares. So this institutional accumulation just went up by like 50%, right? That's something fishy. That's something that I think goes along with this whole unbalanced volume divergence that I'm looking at. And I can look at all the other indicators. Like it doesn't matter because there's no volume. There's no volume. And initially, this is the most frustrating about this stock too, is initially you can look at all these different support levels over here at the top of the cloud, at the Tenkan, at the 0.382. None of that matters if it wants to plummet down a low volume, right? So I think the only thing I can really hang my hat on is what are the whales doing? What are the institutions doing? And I think they're still buying behind the scene. And I'm gonna have to take a look at a higher time frame here. It also doesn't look that great for the Ichimoku because it's still underneath the Ichimoku. But again, there's no volume. All it takes is just a little bit of volume. You can see how like this consecutive volume 1, 2, 3 over here really reverse a lot of this downtrend here. It pushes through, reclaimed the Tenkan, reclaimed the kitchen, got back above the Tenkan collision, had a katana, and just shot way up, right? Right now, we're not really doing that. We're just kind of hovering. This cycle just takes longer. I think this is like an exaggerated version of what's happening over here. We're just stuck underneath both the Tenkan and the kitchen, and we're just waiting for some volume to come in to see whether or not we can reverse the trend. I don't know. Again, I cannot guarantee you that this is going to happen. I have a position on GME. It's about 1% of my portfolio. It's not make or break. I would never get into options with this because it's a very volatile stock and it just doesn't fit my risk tolerance, right? I would never get into that. But do I feel okay holding shares based on the setup that I'm seeing, based on the whales are buying, based on the 20-month moving average has been reclaimed from resistance to support, telling you that there might be a longer term trend change here. I think it's worth getting into. I still think that the risk reward ratio skews towards reward. Although initially I was hoping they would have more impulsive price action. What I was hoping, and it doesn't matter what I'm hoping for, market doesn't give you what you want, right? What I was hoping for is to continue to have bullish expansion up and down and to hit the 0.618. If it end up doing that, and if it end up hitting the 0.618, or even the Ichimoku cloud here, it would help expand the bullish band further and to solidify this bull trend here a little bit more. But instead we got this like low volume plummet down below 0.382. That does increase the risk for it to come down all the way down to like 22 or 20. It does increase the risk for it to do that. Again, I think those demand zone has been tested. I don't think it has to come back down and do that, but it can't, right? On low volume. I'm going to keep DCAing. There's nothing else for me to really say in terms of that because I can see once volume comes in, and I don't know whether or not it's ever going to come in. I don't know when that's going to come in, but once it comes in, it can make some pretty sick moves. And once it comes in, it can make some incredibly sick moves. I still happen to think that GME pumps in relations, and there's a fundamental change here during the last cycle. Before, it didn't really do that, right? Before, GME was actually like a brick and mortar store. Like it didn't care about the global liquidity here at all, right? Something happened last cycle that made it actually end up being correlated with global liquidity, right? This is the M2 global money supply, right? M2 global liquidity supply index. What you're seeing here, you have a big giant pump of the global liquidity, and that also pumped GME along with it, right? As soon as it decelerated, that's when GME just kind of plummeted over here. And the global liquidity was stuck here in resistance for almost 4 years, right? You finally have a breakout global liquidity, and what ends up happening? GME big pump, right? And you have a little bit of back test of global liquidity of the previous resistance zone here, flipping support, right? You see where I'm pointing at the horizontal zone right there, right? You see that the previous resistance level over here, right? I guess it's more like a resistance zone because it's not really back tested perfectly, but this previous resistance zone over here was back tested as support. During this process, GME fluttered, right? I really think this thing is following global liquidity. So if you think that global liquidity is going to go up over time, and it could potentially be volatile, but if you think that global liquidity is going to go up over time, based on rates, based on the fact that maybe quantitative easing is coming, because the Fed is basically stopping quantitative tightening. So it does make me think that this might be a play in terms of macroeconomics, based on global liquidity. I could be completely off base. I don't know. All I know is I have a position. I'm down about like 12, 13. I'm down like 13%. I'm going to keep holding. I'm going to keep DCAing, dollar cost averaging into this and see where it takes me. I just want to let you know like the risk level, things like that I'm looking at. because it did end up breaking down underneath a lot of support levels I was looking at, on like no volume at all. So take that with a grain of salt in terms of what's going to happen. I don't think anybody really knows for sure, because if you know for sure, then you don't need to invest. It's not taking risk. Nobody knows for sure. All I know is coming back and back test this horizontal zone over here. And there's a lot of people who comment on my post saying that that's the case. Yeah, it is. Could it go lower? Yeah, it can, because these are wicks, right? But all I know is that I just kind of show you with the arguments here, and also show you that it is breaking down supports, right? So short term wise, yeah, there's a little bit of falling knife here. I don't know how low it's gonna go. It broke down the daily Shimoku, right? I don't know how low it's gonna go, right? There's no wick on this candle that was closed yesterday. I don't know how low it's gonna go, right? I don't know where it's gonna go all the way down to the low Bollinger Band here on the daily, right? It's all of these things are possible. But with that said, I just lay down why this is still a decent risk reward ratio based on much higher time frame, right? So you're talking about any potential plus or minus 10, 15, 20% moves up and down here during this range over here. But to me, I'm just trying to get directionally correct. I'm just trying to make sure that I am putting money where is in a stock or crypto that could potentially benefit from increased liquidity injection into the financial system, and it could be a beta play for that. I have selected GME based on last cycle's behavior and based on the behavior, what it did. If I'm wrong, I'm wrong. Anyway, thank you so much for listening to this 20-minute rant. I hope you guys enjoy this video one way or another. Take care. Have a good one. Bye.